Hello, I'm Finola Burke from RaaS, and today our focus is on Amaero International, ASX ticker 3DA. Amaero is a global specialist in titanium and specialty alloy powder manufacturing and advanced manufacturing for the defence, aerospace and other industrial sectors. Joining me to discuss the company's recent relighting of its 827-tonne-a-year titanium powder facility in Tennessee, USA, is Chairman and CEO Hank Holland. So, Hank, what attracted you to locate the powder manufacturing facility in Tennessee, and when did this become an option for the company?
In mid-May, I'm always speaking with capital market contacts such as yourself. And in mid-May, in the course of 1 week, I had 3 sell-side research calls, all 3 of which said in one form or another, geez, we're surprised given your deep relationships in the U.S. that you haven't considered going back to the U.S. given the national priority and the national program that launched. They are referencing the CHIPS Act, the Inflation Reduction Act, enhancements to Defense Production Act, Title III, and so forth. And I fault myself. I had been so myopically focused on delivering the UAE. It was an all-consuming project, if you will, that candidly, I'd watched with interest, of course, what was going on in the U.S., but we really hadn't considered it that deeply. I was going to be back in the U.S. for my son's graduation from boarding school in Washington, D.C. in late May. I called on the governor's office in West Virginia, where we have a personal relationship, met with their economic development team, and immediately became clear that they are prepared to expedite and move very, very quickly and very aggressively to attract a company such as Amaero back to the U.S. And the real interest from their standpoint was threefold. And uniquely, we met all of them: critical minerals, given our obviously involvement with titanium, defense production, and advanced manufacturing. And these are really the 3 key areas that the U.S. national policy is focused on. After that receptivity, and yet knowing that we had a very short period of timeline to greenlight the UAE, I reached out to connections that we had firsthand connections in the governor's office and or U.S. senators in South Carolina, Arizona, Texas, Utah, and lastly, Tennessee, all of whom were interested, all of whom began to advance the project. But Tennessee really jumped ahead. And I think what Tennessee did that was very smart was it wasn't just the economic incentive side that the other states were putting together as well, but Tennessee was able to bring in Tennessee Valley Authority that gave us incredibly attractive 10-year contract for electricity, and Oak Ridge National Lab, the premier defense and science laboratory in the United States. And all of that we pulled together from the very first meeting to sign binding contracts with 5 counterparties in 5 weeks. And that was when we announced the change and the decision to relocate into Tennessee. This is a seminal moment for the company. Obviously, the U.S. being the economy that it is, the U.S. having the very, very large and deep capital markets that we have, coupled with this inflection point of trying to attract this industry, reshore these capabilities back to the U.S. in the aftermath of COVID and the Ukraine conflict. So from that standpoint, we couldn't be more excited. Again, it would have been easier had we gotten here potentially a year ago. Candidly, a year ago, it wasn't a choice because these national policies in the U.S. hadn't yet shifted. So it took what it took. Also, candidly, the fact that we are so far along the UAE is part of what expedited our discussions in the U.S. So I don't know that we would have had one without the other. The last thing I would just add is we were careful in a very sincere manner to telegraph to our partners and stakeholders in the UAE exactly what we were doing. We continue to have very strong relationships there. If anything, I don't know if I would say to my surprise, but pleasantly nonetheless, both the UAE and the KSA have doubled down on really trying to attract us back for the next project we've announced, which is midstream titanium supply chain. Our hands are full right now. We've got limited capital resources and human capital. We're very, very focused on delivering Tennessee. But who's to say where we will do our next project after this?
And Amaero is now looking at a start date for production potentially by July 2025. What are some of the milestones that we can expect between now and then, Hank?
Yeah, it's a really important point because what really made this decision easy, Finola, was not only was Tennessee delivering Tennessee Valley Authority, Oak Ridge National Lab, state, local, and county economic incentives, But the Bradley County, and a very forward-looking, imagine, and I wish something like this would happen in Victoria, but candidly, it's not. What Bradley County did on a purely spec basis, they established an industrialization board. They developed a 330-acre industrial park. On a spec basis, they built 100,000 square foot, or about a 12,000 square meter building that will be finished this month. And so not only did we have all the economic incentive, we essentially had a turnkey facility we could step into and begin tenant improvements. It accelerated our business plan by 12 months. Thus, to your point, I'll come back to a timeline. It accelerated our production, our break even, and achieving scale economics. And importantly, will save us $22 million of working capital need. Back to your milestone questions, in general, to lay it out, the next 12 months, so between now and roughly June 30th of next year, we're adding a 30,000 square foot, or about 2,800 square meter high bay extension to the 12,000 square meter main facility. And we've got to build out tenant improvements for the entire buildings. They've essentially delivered a shell of the building that we've shown pictures of and so forth right there on I-75. To complete that extension, to finish the tenant improvements, the contractor estimating 12 months, potentially a little bit sooner, but I'm doubtful. I think 12 months is the right number. We have the electro-inert gas atomizer, or the EIGA, will be on the water and be shipping from Germany to the U.S. in September. That will arrive at the Port of Savannah. So sometime in the fourth quarter of this year, we will have that stored in the U.S. That takes us through the middle of next year. We'll begin installing that equipment. Importantly, the milestones for the rest of this year, and the way I think of it simplistically, is it's human capital, it's financial capital, it's sovereign capital. What I mean by that is we've now got to go out and make some very important key hires so we can drive this project management, establish the expertise that we need to deliver this on time and on budget, and hit the ground running from an execution standpoint. We're well down the road, and you'll see some key hires shortly, announcements of key hires on that front. I think some of these hires will really turn heads in the industry. Again, this is a seminal moment, and you'll see us really double down and pick up the momentum and increase the cadence of these announcements. The next will be on the capital side. So where we'll begin is with project finance. Obviously, that's the least dilutive form of capital. Once we better understand the project finance or commercial banking side, then we will fill in the rest of the capital stack, the rest of the capital structure. And what I mean by sovereign capital is there's things at a national lab, resources that we can never replicate, right? In the US right now, I don't know if it's been released in Australia, but there's a movie out about the Manhattan Project and Oppenheimer. That happened at Oak Ridge National Lab, right? The Manhattan Project, that's where it happened. You can't do those things in private sector. And for us to be able to leverage, right, that intellectual capital, the facilities expertise and so forth is really going to accelerate our progress. Back to your question. So the next 12 months, development of the facility, begin the installation. The next 6 months, we'll install EIGA number 1 and EIGA number 2. Okay. The next 6 months, we'll fully optimize the parameters. And so the assessment you made, which I think is right, is July 1 of 25 is when we would expect to have revenue from powder. Okay. Now, calendar year 25, and when I say July 1, obviously physical the following year, mid-year calendar year. Calendar year 25, conservatively, I think we have modest revenue, but we begin to have revenue from powder. Calendar year 26, I believe we'll have modest profitability. Calendar year 27, I believe we reach scale capacity and we're fully qualified from a material standpoint. If you want, we can later come to, I can touch on now. I think that in the near term, there's going to be some very significant milestones. And I really look at that as kind of a 100-day plan and then kind of a 6-month plan. So on the 100-day plan, it's really going to be the 3 areas that I mentioned, right? It's human capital, it's financial capital, it's sovereign capital. You're going to see some transformative key hires from the industry, meaning powder metallurgy and advanced manufacturing. We have remade ourselves as a company. Amaero, before coming out of Monash, was additive manufacturing. right, which is a relatively small part and highly specialized part of the industry. What Amaero is today and will be going forward is an advanced materials company and advanced manufacturing. And advanced materials I highlight because if you look at the needs of the industry today, aerospace and defense primarily, medical and these other industrial secondarily, it is a much, much larger opportunity, right? When we think about market cap and the size of these opportunities, the advanced material opportunity versus, say, equipment OEMs, 3D Systems is considered a fairly large, mature additive manufacturing company in the US. That's a $2 to $3 billion market cap, and that's a big company. Advanced material companies, you're talking about multiples of that, right, as far as market cap potential and also M&A interest, right, in filling that strategic gap of a lot of these companies going forward. It's also the future as we think about supersonics, hypersonics, space, launch, all these things require innovation on the advanced material side. Complementing that is advanced manufacturing. Part of that is additive manufacturing. Part of that I would call alternative manufacturing. If you look at companies such as Raytheon right now, on a quarterly basis, they're paying very large non-performance penalties for forgings and castings they can't deliver. At the end of the day, the business that we're in is not to create products and try to figure out how do we sell it. The business we're in is listening to our customers, what do they need? And as an example, they desperately need help for alternatives to forgings and castings today. There's well-established technologies that use powder to replicate and create alternatives for forging as an example. That's something that we'll be pursuing. And so you'll see this complement of advanced materials and additive or alternative manufacturing that come with that. And you'll see that in some of these key hires that we make. On the capital formation side, again, first and foremost will be commercial debt. Once we have the commercial debt piece in place, then the next piece of the puzzle will be how do we approach the equity capital? As I've identified in the past, we have strong interest both on the strategic side and the financial investor side. Part we'll be really mindful of is being strategic, not just in strategic from a commercial standpoint, but I've talked a lot in the past about remaking our cap table, right? And albeit we're a public company, I'm a private equity investor, and I still think of this largely as a private equity opportunity. And I want to align other investors that share that view, that this isn't a company to invest in and sell when you've had a 20, a 40, or 60% gain. I really think that we've got a 3x, a 5x opportunity in front of us over the next 3+ years. And I want to create a fairly stable cap table that will be there with us as we realize that. And then finally, that sovereign capability will continue to work with national labs and others, and we'll structure collaborative research and development relationships that are really win-wins and aligning with their interest and what we can deliver for our customers.
And Hank, on that strategic investment front, has the change in location to the US changed the conversation on the investment front?
I would say that it's enlarged our pool of choices. Obviously, the U.S. capital markets are much richer, deeper than it would have been in the UAE or that it would have been to purely be in Australia. In the U.S., you have a venture debt market, you have an equipment financing market, you've got early stage equity investors and growth capital. So we've got a lot of opportunities coupled with within the ecosystem of additive manufacturing, advanced manufacturing, and materials. You've got a number of very well-run, strong businesses, but they've seen their growth rate stall. And so the ability to invest or align yourself with a company like Amaero that has line of sight, right, to the profitability and the size of revenues we do over the next few years is very attractive to some of these companies. And so I think that it hasn't precluded the other groups we're already in discussions with, but I think it's given us new alternatives and new options we would not have otherwise had.
Well, thank you, Hank, for joining me today. I'm looking forward to catching up with you through the course of FY24 to discuss Amaero's progress.
Thank you, Finola. Take care.